it's time for you to rejig your portfolio. Dhirendra Kumar, CEO at Value Research, is joining us today to talk about the importance of asset allocation and rebalancing portfolios. I was talking about in times like these, how important is it for investors to rebalance their asset mix and get the right asset allocation?
No, in all times it is important to have some asset allocation because, most investors tend to think binary. Either they are risk averse and they are entirely into fixed income, or sometimes they just move into equity and they have all the risk assumption capability. And this kind of thinking is the real disaster because in the absence of allocation or, some kind of pre-understood, predefined allocation, investors tend to sway on one side, which is downright risky, and that is why in all times one should have an asset allocation in the back of one's mind.
Dhirendra, what kind of an asset mix would you ideally suggest for short-term and long-term investors?
I would say very short-term investor, they should keep away from equity. So if you are likely to need your money in next 3 years, it is important to, if it is very small amount of money, then keep it in your savings bank account, have a term deposit, be into liquid funds, be into short-term bond funds, but keep away from equity. Only your investment which you are unlikely to need for next 3-4 years, then you should move into equity. Very conservative investors should have as low into equity as possible for investment up to 5 years. So I would say for very aggressive investor, it could be up to 50% into equity if you are likely to need your money in next 3 to 5 years. 5 years and more, you should always have a fixed income allocation. That is important because if you don't have an allocation principle in your mind, you will not be able to rebalance. And you should never have an all equity portfolio or an all debt portfolio. So these are the broad principles which one has to follow, and I don't think there's a precise mathematics or a thumb rule to follow.
Okay, let's start addressing queries. And Dhirendra, today our first query is from Pallavi. She says that, or rather she's asking if it's worthwhile to invest in gold ETF funds.
Right now, I think, the opinion is equally divided between if it is worthwhile or if it is a worthless investment. And, or it could be a very risky investment. So from that standpoint, one should take one's own call. And nobody will have a control on it because it will be entirely guided by the price of gold in future, which looks very uncertain. And I'm very confident about one thing, that the kind of momentum we have seen in the past 5 years is unlikely to sustain over the next 5 years simply because of the base effect. That apart, looking at alternatives, you have very straightforward options to choose from. Gold ETF, if you have a demat account and you can buy through a broker, and gold fund, which in turn invest only in gold ETFs. But you don't need a demat account and you don't have to deal with a broker.
Dhirendra, our second query is from Varun Yadav. He asks you to suggest some infra bonds with decent returns for the purpose of tax exemption.
The kind of infrastructure bonds which were available till last year, they have been abolished. Earlier, till this year, it was possible to invest in infrastructure bonds and get a tax exemption, and it will be a deductible income. That has been done away with. Now there is a different kind of infrastructure bond which will be available, which is not always available, but it will be available as with periodic IPOs of such bonds. And they are primarily the kind of bond which is suited for income-oriented investor, which is you invest in that bond and invest a large sum of money, you get your income, and that income is tax-free. So tax-exempt infrastructure bonds will be available, but not the bonds which used to entail the tax break in terms of computing your taxes every year.